All right. What's going on, everybody? Good morning. Welcome to, what is this, Wednesday? Wednesday, March 8th, 2023. Our pre-market rundown session where we go over any and all information necessary to keep you consistently profitable here across these markets. I'm your host, Adam Holland, stock options expert market strategist. Just wondering, what do you guys see before I start the live? I see you're in here and you can comment. Do you see me before I start the live? Do you see a blank screen? We've been doing this for a few weeks, but I still don't know all the ins and outs of YouTube. So I guess let me know. I know that you guys probably see each other's comments, but I've got no idea what you see before I start the live. So if you could let me know, I was just wondering. Let me know in the comments. Overall, though, excited to be here this morning. Not going to lie, it was one of those nights where I don't know if you guys have ever been randomly oh, okay, we see a picture screen. All right, thank you, Carla. Yeah, I don't know if you guys have ever randomly woken up and not been able to go back to sleep, but that was me last night. I don't know what it was, but some noise woke me up at 3 a.m. I tossed and turned for an hour and a half. And then other than that, I was literally just I just woke up, went to the couch at 4 and just started doing some work just from the phone and went back to sleep for tried to for an hour and then right back up. So I kind of feel like I'm in a blender right now. I don't have those nights often, but I do very randomly where I just wake up and I can't go back to sleep. So we'll see. Might entail a nap throughout the day, but I'm here kicking it out for this pre-market rundown. Like I said, being here benefits you guys, but it also benefits me. And that even on the days that I don't want to be here, I'm like, okay, can I do this? Do I have any inkling, any ability to do this? And if I do, then I get up and I do it, right? So I'm happy to be here. And hopefully I can, kind of catch up on that sleep at some other point during the day, but not fun, right? If any of you guys grew up in the woods or anything, then, bird sounds can be really annoying. And there was some bird that was super, super vocal this morning that was just stopping me from getting my sleep blessing. So maybe I'll get back to it at some point today, but happy to be here. Very profitable day yesterday in markets. We talked about it before it happened here on the pre-market rundown. So that's amazing, right? If you take into account, really take into account what you hear on the pre-market rundown, you can use that to make you money, and this session is free. So we talked about coming back to that 398 area yesterday. And I was saying, hey, if we come back to that 398 area, it's a great area to get long. We put in that shooting star candlestick that we talked about during the Market Blueprint Challenge, right? If you were there for that, throw a 3 in the chat. If you were there for the Market Blueprint Challenge, you want to go back through those recordings. Don't just sit and say, hey, I had a good time, cool, and then go about your life, right? You want to go back through those recordings, all those candlesticks that we talked about, all those patterns that we talked about, memorize them. Memorize them, and every single day on the daily, identify what kind of candlestick we put in. We put in a shooting star candlestick, 2 days ago on the daily. It's a bearish reversal candlestick. So even though Powell was speaking, what are we likely to do? Head lower. Big money really just likes to use Powell as a shield, right? As a smoke and mirrors type ploy or scam, right? They say, hey, we're gonna wait to make our move until this guy starts talking. We were already headed lower even before Powell was talking, right? The probability was lower. Then information leaked that he was going to be more hawkish. So it was everything is pointing to lower, right? And we talked about how, we get long once we headed to 398. Well, we opened up above 398, so that entailed us falling yesterday. So it's just, if you take that information and you really go over it, you internalize it, you memorize it, then you can use it immediately, right? In order to make yourself more confident whenever you're placing trades. And even though that wasn't a super large position that I took because I was maintaining buying power for the larger position, it was still something that made a nice amount of dollars, right? In terms of trading yesterday. So keep your eyes open, keep your ears to the streets. Yes, good morning, everybody. And just be ready to execute, because there are plenty of opportunities to execute, and not everyone has to be tough. Especially with Powell, a lot of times with Powell, it just ends up him being a smokescreen. Whatever is likely to happen for Powell probably stays intact. Whatever was going to happen if he wasn't speaking is likely still going to happen anyways. There will be more fireworks, but it's still going to happen. And that's exactly what we got. We got that shooting star candlestick 2 days ago on the daily, signifying that we would likely head lower. We had a majority chance to head lower. We did head lower. So I didn't feel bad, about taking those puts. Still risky, right? If you're doing anything short term, you're doing anything when a member of the Fed is speaking, especially Powell. But overall the probability is in your favor. So if you're fine with the risk, you can take it. And it's something that paid off heavily yesterday as we had those puts go from $80 a pop to almost $300 a pop. Nice intraday money there in terms of day trading. So now, starting off our top news for today, what else are we going over, right? We're going over what Powell had to say, which again was nothing different than what he already said. Fed Chair Jerome Powell will be back in the hot seat on Wednesday, delivering his second day of semi-annual monetary policy testimony before the House of Financial Services Committee. Markets were already jolted in the previous session following comments that suggested the central bank could put an end to its recent shift toward more gradual tightening. The dollar surged and the benchmark S&P 500 index closed out Tuesday with a loss of 1.5%, which paid heftily, right? Just because the market went down does not mean everyone lost money, does not mean that, nobody got paid. Plenty of people got paid, and the chart telegraphed that move as well. You just got to make sure that you're in that, you're in that zone where you are taking that information in. So let's see here. While the 2-year and 10-year Treasury yield curve hit the deepest inversion since 1981. Again, for people who don't know, you're like Adam, I didn't study econ in college. All you need to know about a yield curve inversion is that it typically is a sign that a recession is going to occur. It's not a 100% probability, but every recession has been preceded by a yield curve inversion, meaning that every time there's a recession, there has been a yield curve inversion before it. Now, every yield curve inversion has not necessarily led to a recession, right? And that's the important distinction. Every time this happens, it doesn't mean we're going to get one, but if we have had a recession, it's always happened beforehand, right? So we've always had this inversion, and that's happened multiple times over the course of the past year and a half. So it's not like this is like a new sign. This is something that's always, it's been going on multiple times here. So from the transcript, quote, "The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy," Powell told the Senate Banking Committee. "As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes." So the speech shows just how dependent the Fed will be on incoming data ahead of its upcoming policy meeting scheduled for March 21st through 22nd. Over the next 2 weeks, investors will be able to size up their positions on how hard the central bank will go, with a flurry of releases scheduled on the economic calendar. Data points include the JOLTS report today, the non-farm payrolls on Friday, as well as retail sales, the producer price index, and figures on industrial production next week. So we get inflation data next week. We do get jobs data, right? In terms of later this week. Jobs data traditionally has been like better than expected, which is bearish for markets. But overall, that's not something that, every single day causes a sell-off. Also, I want to point out that it's important to recognize that Powell has said this every time he's spoken and every time they've made an interest rate decision this year. All he said is that we remain data dependent. He said that nonstop. And then the first time he doesn't use the word disinflationary, everybody's like, oh my gosh, like this guy is dropping the hammer. No, he's saying the exact same thing. He said last meeting, if you check over the transcript, it's all dependent on the data. Not once in a meeting before it's time for them to make the decision has he said, we are doing this with interest rates, right? He's never said next meeting we're hiking 25 points or next meeting we're hiking 50 points. He says, we're waiting on the data. We're going to act based on the data. It's the same thing we've been hearing all year, right? But, because he says this and big money takes that time to bring us back down to the Omega zone, right? Everybody's like, oh my God, what are we going to do? Like Powell tanked the market again. Powell did not tank the market, right? They want to give you a big shiny headline to focus on in order to distract you from what's actually happening. That tends to be how things are in life, but especially in markets, right? Throw a 7 in the chat if this is not the first time we've seen this, right? If you've been with me, you know exactly how these Powell days goes a lot of times. And with these Powell days, whatever was likely to happen beforehand is what ends up happening. Like almost every time, whatever was likely to happen beforehand is what goes down, right? If we were bearish coming into the day, doesn't matter what he said, we remain bearish. If we were bullish coming into that day, it does not matter what he said, we remained bullish, right? When we broke that weekly downtrend, Powell came out and everything he said was bearish. We rocketed. People are like, oh man, Powell rocketed us. No, he didn't say one positive thing, right? That it was just a smokescreen. It was just a smokescreen to establish what was already going to happen. So that's how you need to look at Powell, right? Yes, he can cause volatility, but at the end of the day, it's not often that he is single-handedly moving like changing the way that we're moving. It's just used as cover so that can happen all at one time. And everybody thinks, oh, it's him. When really big money says, hey, we can just dump our money wherever we want to, and we don't have to worry about anyone saying what's going on because they're just going to think it's him. So in terms of seeking alpha commentary, quote, the Fed will soon be entering a blackout period, and this was Powell's last chance to warn the market a rate hike greater than 50 basis points is still possible if the data warrants it, wrote Seeking Alpha Marketplace author Mott Capital Management. That was already well known, right? Mott, like, I appreciate the input, Mott, but overall, he's been saying all year that whatever the data warrants is what we're going to do. He never once committed to 25 points per hike. He never committed to 50 basis points per hike. He's been saying each time, depending on the data we get, we're going to do this. Let's see here. In fact, CME's FedWatch tool now shows a 70.5% chance of a half-point hike, up from 31% before the Fed chair's speech. So right now, people are now factoring in a 70% chance of a 50 basis point hike as opposed to a 25 basis point hike. I feel like overall that ends up kind of averaging out to be good for markets. If you get what you're expected, then typically you don't sell off. And if they do surprise into a 25 basis point hike instead of a 50 basis point hike, then that ends up being positive as well. So it's one of those things where expecting the worst for markets ends up being the best for them. Again, regardless of what happens, we'll be ready for that. But right now, you've got to stay in the direction of what the trend is. That's all you can do. Everything else is noise. You can speculate this, that, and the third. But as long as what is in place on the weekly continues to be in place, that's all you can focus on, right? That's all you have to worry about. Because there were plenty of times last year when there was this and there was that. And what happened? That weekly downtrend still stayed intact. So until it's broken, you continue to roll with it. In terms of energy news, Buffett downs more Oxy. Berkshire Hathaway has resumed purchases of Occidental Petroleum, ticker OXY, raising its stake in the oil company to about 22%, according to an SEC filing. That means Warren Buffett-led conglomerate now owns 200.2 million Occidental shares worth about $12.2 billion based on Tuesday's $60.85 closing price, as well as $10 billion worth of preferred stock and related warrants. The holdings would also generate around $144 million of annual dividends following Oxy's increased payout last month. Occidental, which is now among Buffett's top 10 holdings, has more than doubled in price last year and was the top performing stock on the S&P 500. So overall, Buffett still believes in gasoline, right? Still believes in energy. Maybe he also believes, typically when we have war or something of that nature, energy prices go up, all these things, is necessary for war. Maybe he sold on conflict with China. We do have this ongoing issue with Russia, that's been tough for energy for the past year and a half. So there's a number of different reasons, right? He could just want fat dividend payouts. But Buffett just guzzling down even more oil stocks here. And he still remains bullish on the sector, even though it's cooled down a bit, since its real peak last year. In terms of tech news here, Tik Tok bill. Senate Intelligence Committee Chairman Mark Warner, Democrat from Virginia, has introduced bipartisan legislation aimed at policing the threat of technology from adversarial nations, a move lately pointed at a potential ban of Chinese-based hit TikTok. The Restrict Act would allow the U.S. Commerce Secretary to determine if a transaction poses undue or unacceptable risk to national security and could be sent to the president for action, including forced divestment. It's safe to assume that if the CCP is willing to lie about its spy balloon and cover up the origins of the worst pandemic in 100 years, they'll lie about using TikTok to spy on American citizens, declared Republican Senator John Thune on who co-sponsored the bill, as support builds on both sides of the aisle. He ain't lying. Like, at first it was, kind of like conspiracy and hearsay. Like, I had a friend who was like, this was lab grown. This was a lab grown virus. Like, it came from somewhere in China. I'm like, all right, dude, of course it did. Like, 100%. Right. And then now, there are all these different, agencies are concluding that was likely the case, which again is like still crazy to me, but valid points. And that's why at this point, it's just like, can you really trust anything right now that is coming out of China? I don't want to sound like that person that's like, oh, rah, 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 USA, and like boo everyone else. But overall, like, we've got these spy balloons that are all over the world. Like, we've got this pandemic that apparently was lab grown and came from you. Like, it's like, if what's the George Bush quote when it's like, fool me once, shame on you. Fool me twice, can't get fooled again, right? Well, you fool me once, shame on you. If I go back for more, then that's on me. So at this point, I'm kind of on the board. You guys know how I feel about TikTok. I'm on board with this whole thing because at this point, I'm just like, if you get bit by a dog once, all right. But now you know the dog bites. Don't keep going back for more. I'm trying to have the supply chain moved out of there, right? And I'm trying to have anything related to my daily life moved out of there so that it is not at the mercy of whatever President Xi Jinping feels like based on his daily whim. Let's see here. Any ban on TikTok would affect social media players like Snapchat Spotlight, Instagram Reels, and YouTube Shorts. So, as far as I'm concerned, let's go Instagram Reels, let's go YouTube Shorts, and just get rid of TikTok. At the end of the day, you can learn plenty of stuff on Reels. Everybody says I learned so much from TikTok. You can learn it other places too. What you don't want is a country that we might be at war with in the next few years learning that much about you, right? And let's say they built a back door into this and they can shut down your phone or affect your network, what have you, right? We don't know what the heck these countries can do. It just ain't worth it. So we'll see what ends up happening with that. But it's got support on both sides of the aisle for right now, which is just another thing that is pointing to the fact that it makes me feel like there might be some type of conflict, with China going on here. Let's see here. Bonus survey, adversarial tech. Besides impacting the stocks mentioned above, outlawing TikTok could have far-reaching consequences for the creator economy, marketing departments, and national security policies. Don't forget that the American government has already ordered the app to be removed from federal devices, as well as a probe from CFIUS. Just a little bonus story on the back of that. In terms of today's markets, we got a mixed bag across the board. I don't even know if it is still like this. We know that at the time in which this newsletter comes out, typically things have changed a bit, but it had us mostly green across the board. We were looking more flat than green, but in Asia, Japan up 0.5%, Hong Kong down 2.4%, China down 0.1%, India up 0.2%. In Europe, the footy in London at midday is flat, Paris flat, Frankfurt up 0.4%, the Dow up 0.2%, S&P up 0.3%, NASDAQ up 0.4%, crude down 0.3%, gold flat at 1820, and then Bitcoin down another 1.4% back to 22,000. In terms of today's economic calendar, the big thing, of course, is going to be Powell at 10 a.m. We got the ADP jobs report at 8:15. That's really the only other thing I could see impacting us, pre-market, but overall, everything's going to be hinging on Powell. I don't know if he'll say anything different than what he said yesterday, but again, what Powell says is really just uses a smokescreen. We put in a shooting star bearish reversal candlestick on Monday, right? So on Tuesday, we were 80% likely to head lower, regardless of what Powell said, right? And if you're in the Facebook group, you had the opportunity to get in on some puts that paid very heavily, from $80 to almost $300. Powell is used as a distraction. I'll say it. I'll keep saying it. At the end of the day, what is likely to happen is likely to happen, regardless of what he says. He didn't cause the sell-off. He provided a smokescreen that allowed the sell-off to occur back to the exact level that I talked about was our buying level, right? I said, hey, 398, we get back to this area. That's the area, right? If you had a one-on-one over the weekend, I'm like, hey, watch this area. This is what we're looking at, right? To the Q&As, all that good stuff. We have to drop in order to get to that area, right? So it was self-explanatory. It was broadcasted, and it was something that we were on top of, which is important, right? And give yourself a pat on the back, because knowing what's likely to happen before it happens is an amazing thing when it comes to markets, right? Being able to size up probabilities and doing it from something as simple as the shape of candlesticks is huge. That's why, again, for my people that were in the challenge, go back through, especially days 1 and 2, and memorize all that stuff, right? Memorize what was taught so that you can look at a chart and immediately know what the shape of a candlestick means in relation to that body and those wicks. In terms of what else is happening, this sector shook off Powell's hawkish remarks, but this one did not. I don't care enough to click that. Climate change can erode asset values and shock financial system, said Janet Yellen. Weight Watchers stock surges 80% on Sequence acquisition. NTSB to probe Norfolk Southern, ticker NSC, safety culture after recent incidents. Earnings and outlook come in strong at CrowdStrike, CRWD. Great for Crowd. We might watch them this morning for a bullish continuation, right? We'll see. Sleep at night stocks for those hedging or risk averse. Amazon now solidly a top pick at Goldman Sachs. JetBlue, ticker JBLU. Spirit Airlines, ticker SAVE, pushed back on DOJ complaint. Chances of Altria, ticker MO, selling AB InBev, Budweiser stake are increasing. And then Occidental Petroleum, Oxy, sees U.S. oil production falling short of government forecasts. So overall, that'll be our pre-market rundown for March 8th, 2023. We're rolling through March, right? We're rolling through March, and this is a very, 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 action-packed month, right? We got a very action-packed month happening, but plenty of money to be made, money that we've been making this week and money that we'll continue to make for the weeks to come. At the end of the day, there's tons of news, this and that. The charts are how you make your decisions, right? The trend is the trend until it is not. You make decisions according to that, and that's all you can do. Don't overcomplicate things, or else you'll end up with analysis paralysis and no better off than you were to start. So I appreciate everybody popping in today. As always, if you got even one little morsel of value, just show love across these accounts: YouTube, Instagram, TikTok, right? If you're there, show love, throw likes, comments, saves, sends, all that stuff helps me continue to come here and provide all this value for free. So it's much appreciated. As always, we're looking to get 1% better, and you got 1% better by tuning in here to this session. So have a great rest of your day. I'll see you back here tomorrow morning for our next pre-market rundown. Have a good one, people.